Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Sorry, I was running just a minute late. Sorry about that. Hope everybody's having a great day and happy Tuesday to you on this shortened week. There are some very slow-moving markets at the moment, but I guess one market we should be looking at specifically is the S&P that continues to grind higher. This is kind of what I think is going to happen, but that doesn't matter right now. Right now, obviously resistance is going to be these highs here at 42.45. And the reason why I think we should be targeting that is because we are above the 88% retracement now. So it does seem like we should either hit the highs, if not new highs now. So I'm going to write down 42.45. And, we just continue to be bullish. And I think this is 41.85, if I'm not mistaken. So let's go ahead and figure that out. Yeah, it's 41.80. And as long as we are above that, we have to remain bullish. So what does that mean for us in currencies? Well, that means that we have to remain dollar bears near term. Hold on really quick. Okay. And I think we have to remain, just defensive with dollars for right now. And look at the euro. The euro's holding up, but if you caught my analysis on the FA.C.E webinar, I'm concerned that this resistance around the 78% retracement is still going to stall the euro. But that doesn't mean that we can't, have a dip back to 122 and then back over to, 122.50. If you weren't in the chat room last night, I popped in there like late in the afternoon yesterday, and the euro was trading at like 122.30 or something around there. And my comments last night were, hey, I've been around long enough watching like holiday trade. And when, they move a market higher or lower in a holiday thinned out trade, a lot of times what happens is you get a little bit of a reversal going into the first full day of trading. So yesterday we were trading at like 122.30, and I'm like, yeah, we, gapped up and moved up above 122. I said, tomorrow, I wouldn't be surprised if we're back at 122. I think we'll probably see 122 again. But right now, 122.50 is going to be resistance, I would say, in the euro. So 122.50 and support, I would say anywhere back down to 121.80. This whole level of support right through here, it's going to, and actually we could probably even go below that, but I would say for now, 121.80 is support. And because we had a false breakdown on Friday, we have to continue to keep it with a bullish bias while we're making higher highs and higher lows. And really, in all actuality, that we are doing. You look at higher highs, higher lows, right? So we just have to be respectful of this. Okay. All right. Cable. Now, the cable, we traded a brief new highs and then we're pulling back. So now the 50% retracement of the low to high here comes in right at this trend line. So this trend line comes in at 141.30. So that's going to offer support resistance is obviously now 142.50, because that was, and let's be respectful of the fact that that was a new high, right? Brief new high. And then obviously below, you know what, below here we're gonna have to talk double top actually. So I want to mark down this as support, the 618 retracements. Screw this, let's get rid of this trend line here. What's more important to me right now is going to be this low. This is the 618 retracement. It's horizontal support that comes in at 141, resistance at 142.50. And this is going to be significant. I'm going to actually put an asterisk here, and I'm going to keep this in bullish for now, but we break through that 141, we got a double top in play. Count it. So if this breaks, here's why this is such an issue, because if we break this double top, this will push us all the way back down to 139.50. Now it would take us below this channel support. That's why that's so significant now. Let me remove that. I'm going to actually set an alarm for that. I really want to be notified below 141, because if that happens, that's going to be a pretty bearish move, I would think. Aussie. RBA did nothing, kept rates unchanged. So we have nothing to do here. 78.20, 76.80. Range. Kiwi. So with the Kiwi, I think we have to be mindful of the fact that let's get rid of this here. That we were unable to break into new highs following the RBNZ last week. So that means this is really significant resistance now. And let's just call it 73.10. I want to think about this for a second. 618 comes in right around 71.90. Trend line will be about 72 cents by the time we get there. So I'm going to write down 72 cents for now. I'm going to keep it in range as well. Okay, let's go to dollar Canadian. Dollar Canadian's trading heavy. Crude oil is very strong today, is obviously pushed down the dollar Canadian. It does seem like 120 is going to be tested. I mean, this is clearly breaking this triangle. It's staying below every level of resistance. And unless we get above 2150, we have to remain bearish here, and 120 seems doable. That's going to be significant, obviously. Dollar Swiss. Well, we're just going to write for now, obviously 89.30, which is this whole, I actually thought last week we were going to reach for 89.11, 78% retracement, but that just was not in the cards. We couldn't make it below that 30. So resistance, I still think, is going to be very significant on the way back up here, which comes in at 90.80. Remember, the 200-day moving average is right around that level. Oh, where'd my 200-day moving average go? Oh, there it is. It's still around the same area. So I'm just going to write down 90.80. I think we need to stay bearish while below that. US dollar, Norwegian krona. If you probably got the analysis earlier this morning that we were retesting this wedge, and we got a hell of a response from there, matter of fact. So that support will come all the way down into right now about 123 or 823, excuse me. So I know last week we wrote 827, but that was just this trend line. So, you know, if we're still respecting the trend line, that just takes us a little bit lower this week. Resistance 842 still. Dollar MEX. This trend line is still respecting. That resistance is going to come in at 20 today. So, you know, just thinking about this right now, this is going to be more of a wedge as we have descending highs or lower highs, descending trend line. So we're going to write down for the dollar Mexican peso, 1978. 20 is resistance. Above that is 2030, as you guys know. But I think we need to stay bearish. Well, you know what? I'm going to keep that in range because that false breakdown just makes me want to be really careful about being too bearish. The dollar MEX, just as soon as you get bearish, then the next thing, no, the thing's just screaming back up in your face. So, and look at like the rand today. The dollar South African rand is actually holding up. The lira is a little weaker. So these emerging market currencies, I want to be a little careful getting too bearish there. All right. Dollar index. So support remains at 89.60. From last week, and the spike high at 90.50 is, you know, that's got to hold. I think anybody who's bearish the dollar is going to want to see that hold. And I think while we're below, God, you know, it's just, it seems like it's just a range right now on the dollar. Dollar yen, 110 is going to be resistance. Any move back up to 110 is going to be resistance because people, and because anybody that got sucked into the dollar yen at 110 last week is like, you got to be thinking about what they're thinking. They're thinking, oh shoot, if we can get back to 110, I want out, right? So I think 110 is going to offer resistance. I know that was a big. I would even doubt that we're going to, you know, make it back up there. Not today anyway. But if we got a spike up into 110, I think you're going to get people happily selling up there. So this trend line and this trend line will both coincide right around 109, right around the 109.20 level. Let's just write that down as support. It's minor support. Gorkin asked if I could look at the US dollar Turkish lira. Yeah, I'll look at it soon as I'm done here. And I know Dimitri asked Stelios about the New Zealand Canadian. So just Stelios, just think about that for Dimitri. Let's go talk about Bitcoin and gold and silver. So let's start with silver. Silver just hit the 88% retracement. And you know what? Just while I'm looking at it, do you know what this is? It's basically a Gartley pattern. It's called 78% retracement, 88%. I'm just pointing that out, but I wouldn't necessarily trade that. I would just think that resistance is going to be 28. As you guys know, 28.80. Support's going to be down here. Trend line, which will be 27.80, and I think that's the better play. Just wait for dips back to 27.80. Resistance 28.80, and I'm going to keep it range bound where gold's, obviously bullish. And what the? Oh, I deleted everything here. That's why. 618 is, I knew that was the case. 1920, remember that's the 618. Dips down to 1845 are being bought. So the same thing. 1845, as long as that holds, we remain bullish. 1920 is resistance. And then beyond 1920 is this resistance right here, which will be 1960, just in case we spike higher. Okay. Bitcoin. Bitcoin's trading heavy. We were just trading at near the intraday lows. Oh, it just spiked up. What the hell? Look at that. Just over the last 30 minutes, some buying came through. We were actually hitting little lows there, and then so I think Bitcoin's trapped in a triangle, and 38.5 roughly is resistance. 38.5. Okay. Then 40K, because that's where the 200-day moving average is at. Don't forget that. Right there. Actually, it's 41. It's actually 41.1. So let's do this. 41K. Okay. KK. Support is going to be 34,500. And then 30K, 34.5K. All right. And we're going to keep this, we're going to keep Bitcoin bearish while we're below the 42,000 level, definitely below the 200-day moving average. Okay. So that's that. And let me talk about the US dollar Turkish lira.
Really Can you show me the bias chart just for a second so I can please take a snapshot?
Nope.
You didn't leave it even for 2 seconds.
Nope. I ain't doing it. Okay, here it is. Here, there you go.
Done.
Yep.
I got it. Thank you.
You got it. Okay, Cool. And you heard Dimitri asked you about.
I did. It's a tough one. But yeah, okay. I heard it.
Okay,
Yeah.
cool. All right. US dollar, Turkish lira. So here we are near the highs. And, this is one of those currencies that I remember we had this cup and handle completed. I was thinking, man, that's it. That's it for the US dollar, Turkish lira. It's never going to see those levels again. That's what I was thinking in my own head. And here we are back at the highs. So, I mean, you have to assume that if we break out above, let's just call it 8, I guess I would just call it 870. Above 870, we've got to take out new highs to 903 at least. The one thing I'd look at daily relative strength, it is obviously very divergent. So even if we get a spike higher, like let's say the US dollar Turkish lira breaks higher, and let's say it goes all the way to the 161% extension at 960, I bet you that relative strength doesn't even match the previous highs. But that's how a currency will hit new trend highs and relative strength not hit new highs, and that can continue to happen for all of eternity. It can. I mean, we've seen it happen time and time again. So I would not be thinking bearish the US dollar Turkish lira right now. I would be thinking it's just, I mean, here's your daily chart. Just do this. While we're above that blue trend line, don't be bearish. That's a pretty good assumption, I think. And right now that blue trend line comes in around 841. So while you're above 841, you got to imagine we're going higher, right? Gorkin says, should go to 9. Yeah, I think so too. Also, do you think gold going to turn bearish soon? I don't know. I don't know. Gold's holding up pretty well. I think if precious metals turn, you got to sell silver. And I would want to do that anyway. I would way rather play gold over silver just from a risk aversion standpoint, because if we see stocks sell off for some reason, then I think gold will outperform silver overall. So I think if you're in the camp of being bearish precious metals, I would probably just focus my attention more on silver than gold. That's my opinion. All right. So guys,
conversely, if you're bullish, silver is going to be moving more. So you might as well do gold on steroids, which is silver. Anyway, it's a tough one.
It is a tough one. But like, again, gold's outperforming silver, and it has been outperforming silver.
Well, not today, but yeah, overall, yes.
Overall, I mean, I'm talking, especially over the last, like, here's your daily chart over the last couple of weeks. Silver's just been barely pushing higher today.
Agreed.
Obviously, we're moving a little bit.
I think silver is going to explode when gold reaches all-time highs. When that happens and we're really properly into a bull market, then silver is going to outperform. But you're absolutely right. The last couple of weeks, not doing much.
Yeah. Okay. That makes sense. All right. Well, other than that, guys, I'm gonna let Stelios and Steve take over. I'm assuming Steve's here as well.
Yeah, mate, I am.
Okay. All right. I don't know what to do here. I mean, it's kind of like, I don't know what to do. I'm actually sitting here trying to figure out like what new positions do I want to put in. Look at NASDAQ ripping higher right now, and the Dow and the S&P are under pressure right out of the gate. That should tell you there's a move in bonds brewing, huh?
Yeah, we gapped open lower today in treasuries.
And look at yields. I mean, yeah, yields are ripping. Whoops. So I mean, with yields going higher, NASDAQ's decides it wants to play a little catch up this morning. So yeah, all right. All right, guys. Well, hey, I'm going to let you guys take over. Thanks everybody for tuning in with me. And I know Stelios, you were going to cover the New
Kiwi
Zealand
CAD.
meeting. And then I'm sure Steve's got some analysis he'd like to do. So I'll talk to you guys soon.
Okay, mate. Bye-bye.
Right, see you guys.
Okay. Kiwi CAD is something I've never ever traded as a pair, but I've been thinking about it over the last 5 minutes. You're sharing, perfect. Okay.
Oh, you want to?
No, it's
grab
okay.
the
No, I
screen
didn't have much to show. But the question is, these two central banks are the ones that have started being hawkish, right? The Canadian Bank of Canada are tapering, and the RBNZ are indicating that they're going to be hiking. I think the market's pricing 2 hikes by end of next year. So nothing massive by any means, but they are the first. So what do I think of those two? They're both obviously correlated with risk and commodities. I'm quite worried. I would be a little bit worried about both of them because look, we've had risk on equities going to all-time highs, oil's hitting nearly 70. Everything is going. The dollar is weak. Everything is going the way you would want it to go if you are long either of those two currencies. And they're not breaking out. Actually, the Canadian is breaking out lower, USD CAD. The Kiwi is not. So I think I'm finding it very hard to actually prefer one of the two on a macro level. But I think if you had to ask
Speaking
me,
of which, Stelio, not much of a surprise, because if you see the Canadian spent, what was it, like a couple of weeks consolidating in what clearly looks like a symmetrical triangle, and you're in a downtrend.
Yes.
And the best thing the bulls can master is just a few days of consolidation. Not a very promising sign for a reversal, right?
Yes. So I was going to say between the two, I would like to own the CAD compared to the Kiwi. So that pair, Kiwi CAD, I'd probably, if you tell me to trade it, I would be selling it.
You said Kiwi CAD.
Kiwi CAD, yeah, Kiwi CAD. So it's the two.
I haven't checked that in.
I've never checked that.
No. I do. If you'll see my drawings won't be. Yeah, actually, they're still recent.
Yeah.
Yeah. Look at this.
Well, in the short term, I think I'd want to be selling it, but
look at this.
Overall,
right?
It's just a sideways consolidation.
Yeah, exactly. I mean,
years.
Yeah. I mean, I think I would look for other things to trade. I mean, I think the intuitively easiest way to make money in trading, in FX trading, is try to find the best relative strength and buy it against the best relative weakness, right? And Kiwi and CAD, you'll never find that kind of a dynamic there for obvious reasons, right, Stelio? So there are periods of time that in the short to medium term there are, they are trending, right? But I mean, they are much more similar than they are dissimilar in a way. So I'm not against somebody doing a technical trade. I still remember I had made quite a lot of money. If I remember right, it was the summer of 2012 or the summer of 2013, trading the Aussie CAD to the downside. Let's go back in time to see. The summer of 2013 then. Yes, I remembered right that it was one of the 2 years. So I had made some good money trading this to the short side. So it's not that I'm inherently against, trading those, because on occasion you might find like a sharp move like the one we had there, unfolding from late spring of 2013 to end of summer, more or less, of 2013. I still remember because I was on vacation, and this is the only trade that I left on while I left for vacations. It started moving very sharply, a few days after I was short, and I just let it run. And I remember that the fact that I was on summer vacations actually probably helped me squeeze more money out of it, because I in essence, was in a much calmer mood to just let it ride. And because back then, of course, I was like 9 years younger, so less experienced than I am now, so I was more prone in taking profits earlier than I would nowadays. But the fact that I was in summer vacations, that we were all day long out in the sea, so on and so forth, helped me actually let it run its course a lot easier. So I'm not inherently against trading those, but as a general rule, as I said before, you should be looking more to trade dissimilar currencies with each other, because these are the ones that create the stronger trends. So from that perspective, and just by zooming out in the Kiwi CAD as we saw, I think these are made mostly and most of the times for short-term trades, not longer-term trades.
Okay, I agree actually. So yeah, in the medium term, it's very difficult. It's difficult for me to have like a macro opinion, but I think in the short term, if you want to take a trade, if you ask me, I would be selling it. But again, it's not a high conviction trade, so I wouldn't be.
Yeah, in the short
involved.
term, in the short term, it remains somewhat under pressure. Although I'm watching this formation, that I wouldn't be surprised if it got resolved to the upside. But we break to the downside from this formation, then I think we might see a good move to the downside. I would be very, very careful though. Once we reach 0.83, it's a very nice longer term support resistance area. So even if we break down from there, I would start paying close attention once we reach this confluence of supports at 83 cents. So that would be my ultimate downside target. Now we do break through that, then we target 80 cents, which is that spike low over there. Do we have any more questions? Although I have things to say, Stelio, because we had like parent,
No, we don't
online
have anything else.
parent meeting, so I joined a little bit later. Okay, so let's see a couple of things. And today I would start by mentioning the potential breakdown in the USD CAD. We already saw that. The USD NOK lagging a little bit, but in all, to be frank here, I think it's going to just break down in the same type of manner. It seems to be lagging a little bit. And why is that? Because today we seem to be making a conclusive move out of this triangle in the case of crude oil. I wrote specifically, and I mentioned last week here on the webinar, that listen, we're trading slightly above the symmetrical triangle, and I don't want to register that as a legitimate breakout, being a Friday and barely being above the triangle's trend line resistance. I would be very skeptical with registering that as a breakout. But seeing the move we're getting out of the triangle today, and if we do close rather strong on the day, I have absolutely no reason why I would distrust this move. I mean, we had already mentioned how bullish is the fact that crude has spent this time consolidating in range rather than correcting lower in price. So correcting in time rather in price, given the fact that we've been in an extremely bullish trend. And I've said in advance that, in my opinion, a breakout from this triangle clearly targets higher highs, with an asterisk here that, as I've said multiple times, breakouts in mature trends out of triangles can very, very frequently be terminal moves out of the triangle. Meaning, I wouldn't be surprised if this leg higher that started a few days ago, when we found that low over there, runs its course by perhaps, let's say, getting us to the 161.8% extension at 74.60 something, or perhaps to that high at 77, or perhaps even a little bit lower. I mean, we have this upside target, the 127% extension at $71, and then we start seeing finally a proper corrective move lower. But that's a second viewpoint. We don't have to bother about it as we speak, because we have a fresh breakout in hand, and I don't think you should try to fade it, because I think there is a good chance that there's going to be a decent follow through to this breakout to the upside. So keep that in mind. That's at least what I think. So we're seeing this healthy move higher in crude. Stelio, did you make any mention, by the way, in the previous webinar or in this one, because I lost the beginning of both of them, about the attempt from the side of China to contain the yuan strength?
Currency. No, we didn't mention it. No. We didn't.
Yeah. Listen.
So they moved the reserve requirement.
Yes,
right?
for US dollars. That is very correct. Listen. Comment number one, I think China is making a big mistake. I think they shouldn't try to fight their currency strengthening. They should embrace it. Personal opinion, as a free market economist, I think they're just going to hurt themselves by doing what they're doing. Comment number two, don't try to trade this based on that. From my experience in central bank intervention to currency moves, with your even greater experience, what have you noticed whenever central banks are trying to contain their currency strength failure? Do they actually end up succeeding or failing more frequently?
More, yeah, they can't succeed. I mean, usually they can. Best example is the BOJ, right? They used to do that, and
it's the BOJ, it's the SNB, it's the Bank of England. So call me a contrarian, although I don't think, historically judging, that this is a contrarian thesis. But I believe once you start seeing central banks trying to contain the strength of their currency, that's a good signal that there's going to be more strength coming through the market. So if you ask me, the best they will end up succeeding in is containing the strength of the currency, but not reversing the trend that we currently have. There is a very, very good reason why the USD CNH is moving lower. And in my opinion, there is a very, very good reason why it's going to continue doing so. Now, technically speaking, this low happened at a nice confluence of supports, right? So, there's that. But on the other hand, I really don't see any technical signal that would turn me bullish. And having said that, also keep in mind that 640 is a nice resistance if we make it there, which is very close. So 640 might be even a good level to sell into. So that's my comment about USD CNH. I barely caught Blake mentioning the USD TRY before, so just a fast comment there. I have no reason to believe that this trend is going to reverse either. So in my opinion, you should be trying to hope that this is going to prove to be some kind of a double top. I'm not saying it's impossible, because nothing is impossible, right? But if I had to bet, if we're going to be forming a double top here, or we're just temporarily installing here before we explode higher, I would put my money on the latter as a possible outcome, right? That we're consolidating here, and sooner rather than later, we're going to explode higher and gun for above 9 targets next. You can see that the 127% extension of this last corrective move lower is at 9,036, for example. I see absolutely no reason why we won't make it there. Absolutely no reason. Gorkem, I get it from your name that you're probably Turkish, and I agree with you. As I've said before, my friend, and yes, yeah, as I've said before, and many people think that Greeks, Turks, we have something to something to fight over. Personally, I have a lot of Turkish friends because I've lived a long time in Rhodes as well, where the two people live together harmonically. I mean, we have a lot of Turkish people there, and I have very good Turkish friends that live in Canada, so on and so forth. I believe that fundamentally speaking, the Turkish economy has the potential of doing magnificently. Once the political issues get resolved and there is some proper economic management, Turkey has one of the most important and rare elements missing from the vast majority of economies at the moment, which is amazing demographics. So I am looking forward to the day that I will be able to be bullish the Turkish lira, because I think that once things change politically, I think that there is going to be a massive, massive overperformance of the Turkish lira against the dollar and against other currencies. And I think that's going to be an amazing long-term trading opportunity. So I'm looking forward to the day that I will be able to buy Turkish liras for the long run, but I don't think we're there yet. So let's see what other things I had to cover. Yeah, so yields. First of all, I mentioned before the treasuries. As you see, and don't dismiss this technical development, we closed on the 20th of May there, and today we gapped below this technical consolidation. And I think, and look at the RSI, by the way, at the same time that we gapped lower from this pennant triangle, you just want to call it a triangle or whatever, it doesn't really matter. It's a corrective formation, in my opinion. It had clearly corrective characteristics any way you look at it. So we gapped lower from here. We're breaking down from the RSI. I find it very hard to want to fade this. So I think there is a very, very good chance that now we've had this technical development here in the treasuries. It's a matter of days to have this technical development in the yields, right? Which means a break higher in the yields. So, the implications of that are, clearly, for example, use the yen might accelerate higher from here if we do see this dynamic unfold, right? So that's one thing to consider. And the other thing to consider is that, this move makes it quite hard to want to fade the indices. There is still the technical interpretation that we might need to see one more leg lower in indices, S&P, Nasdaq, so on and so forth. So this scenario is technically not dead yet, right? But in any case, it's, first of all, it's a counter trend scenario, right? There's no question about it. Second of all, as I said, seeing what I'm seeing at the moment doesn't make it easy to want to trade, in the other direction in equities as well. So keep that in mind. Higher yields means lower gold, by the way. I'm bearish in gold. I don't agree with that. Higher real yields means lower gold. With that, we can agree.
And that's short term, right?
Yeah, and that's short term. And with that, we can agree 1000%, not 100%. But the question is not what happens with nominal yields, but what happens with real yields. Because if we keep getting inflation numbers like the ones we've seen, and we get just, a mediocre appreciation in nominal yields, gold has absolutely no reason why it would want to tank. Having said that, there is a technical case to be made looking at this formation that gold might want to pull back and backtest this broken channel trend line resistance as support. So I have to tell you that technically speaking, I wouldn't be surprised at all to see a pullback towards 1830, 1840, 1850, right? Yeah, it wouldn't surprise me, at all. Now, silver is also approaching an interesting, let me actually, instead of intermittent, let me make these solid lines. So silver wouldn't surprise me if it pulled back as well. You can see here why, right? I'm looking this as a possible longer-term symmetrical triangle, right? And you see we're getting very, very close to resistance. Also coinciding with a 78.6% fib of, this move lower. Now, somebody can make the observation here that this is not a triangle because that was a higher high. I found, I've talked about that in the past, and I found that on occasion, it's more relevant to the market to take into account the closing prices. So look at this. If I transform this chart, right, from a bar chart to a line chart, right, that takes into account only the closing prices, you can see that, we didn't produce, a higher high there, right? So that's why I don't have much of a problem, taking that as a probable interpretation. So 2873, nice confluence of resistances up there. We're very, very close to it. As somebody can say here about with gold that we seem to have been losing a little bit of a momentum. We almost made it to the 61.8% fib from the all-time high to this corrective low that we had. So yeah, I mean, technically speaking, a pullback is, is welcome actually, right? I find it quite healthy. Now, if that's going to be triggered by an initial spike higher in nominal yields, might be the case. But do I really believe that a breakout in nominal yields will actually end up being the catalyst for gold and silver finding like a significant high here and changing their trend to a downtrend? No, I totally believe that's not going to be the case. I believe that central banks are going to remain behind the curve having to do with inflation. And the implication of that is that real yields are going to remain deeply negative, if not go even further to negative territory than they currently are, right? So I'm not worried about the direction yields. Hi, Steve, what do you think about the USD ruble around this price? Break lower or get back to range? Let's have a look at it. Yeah, as you see, this is one of the many examples that many times you have to be very, very patient with letting price action unfold. Look now how much time we've spent. We had this sharp move lower, then this sharp move higher, and now we're consolidating in between these levels, right? So there is the larger chart that still leaves open the interpretation that this is a big cup and handle formation that would imply much higher prices. Fundamentally speaking, I find it very, very, very hard to believe that the ruble can depreciate that much against the dollar. I think it's already very cheap against the dollar, actually. So to begin with, my fundamental thesis would love to see the USD ruble moving lower, right? Now, am I willing to blindly do this? No, I would want the technical picture to also align with that. And for the time being, not much is happening. It's more than clear to me that this 72.5 is an important area of support, right? So, the closer we are to 72.5, the harder I find it to want to be short, right? But we do break through 72.5, I think we're going to see follow through. On the other hand, we might just find support at 72.5 and rebound once again within this expanding triangle. So bottom line, would I be doing something with this pair imminently? Nah, I won't. I'm still looking at it like 2-3 times per week. I'm opening the chart and looking if there is something different, or we're approaching, support, resistance, or whatever. But I don't see this like something that's about to produce a trading opportunity, if you ask me. So I think we're some distance from that. PA, PL, SI. So we already covered gold, silver. Now having to do with palladium, I'm going to start with palladium because palladium is very, very close to breaking out. Now, we drew this some time ago. So just by reminding you this, you can understand that I would trust the bullish breakout, right? Because I expected that we might see one more leg lower towards 2700. We didn't exactly make it to 2700. We came close to that. And now we're testing resistance. So I think we break out through here and we're on our way to 3,256, right? Of course, there is no absolute guarantee that we can't do something like that, right? We can, but we break out from here. I don't think you should be fading it. So these are the two possible outcomes from where we currently are, in my opinion. Okay. Now, having to do with platinum, I would still remain patient here, right? You can see that this type of price action here. Now, I would still favor more the one leg missing to the downside scenario, something like this. So technically speaking, and especially looking at it in isolation, I would favor this outcome. But, I I would still not short it, right? You know me, I've said it before. I don't want to be short anything that has intrinsic value under current global conditions, anything. So, I only want to be on the buying side of tangible things and assets, right? I'm fully recognizing when the chart tells me that there's a good probability of pullbacks and corrective moves, but still I want to be on the strong side, which is the long side. So, I let you do the shorting if that's, what you want to be doing. From a technical perspective, you have a nice risk reward ratio if you want to do it from here. But personally, I would find it just more appealing to buy platinum if we make it to 1040, right? That's what I would look for. How would you take a position in nickel? Is there an ETF for it? I have to look for it. I'm not sure. I'm pretty sure there is. But, I always have other avenues to trading things as well because I have access to friends that trade directly with banks. Also to my, to the fund I used to work with, we have, amazing relationships. So I can have them buy stuff from me directly from, banks. So, I have ways of trading things that I don't have directly access to through my broker. But if you're really interested, I can ask for you. It's very easy for me to find out if there is an ETF or whatever. I can tell you though that we're back testing once again significant resistance. So in my opinion, as I've drawn on this chart, this is a pivot area. There is a chance that we've already found a low. There is a chance that we haven't. Technically speaking, for the time being, as I said, testing this resistance area, I would not be buying up here, right? For obvious reasons. Nobody says that there is not more weakness that's going to come through this market. I wouldn't even be surprised if there is a lower low coming in this market, something like this, before we can move higher, right? So as we speak, if I was forced to trade this today, right here, right now, I would be forced to sell it instead of being a buyer. Now, if you're asking me what I would love to do in the longer term, if I had to take a position, it would be to buy it at better prices, right? At the 1146 previous low, even better, closer to 1050, nice horizontal support resistance area. We will also satisfy this way, seeing a lower low and, seeing something that looks more like a completed corrective move to the downside would make me more confident in buying, knowing that I'm probably buying, value instead of trying to, chase the market higher, a market that has already done very, very well in the past few months, right? I'm going to read. Let me open. Yeah, so it's the constant maturity rate. Okay. Yeah, as I said, that doesn't change my thesis about it. I care more about this is just a continuous in essence, right? I care more what happens with real yields, and I believe real yields will keep on moving lower. So I just saw it. Sorry, ignore the last one. Suppose the negative correlation. Okay, let me see this one. Constant maturity rate. Still, it's constant maturity rate. It's not real rates, mate. So what I told you before applies 100%. Okay, I think we covered more or less everything for today. Sorry, I forgot one. Copper. There was a question about copper. So here it is. I think there is a good chance that copper has broken out. You can see here why, right? It seems to be likely half a step ahead of platinum. You see how similar these two charts are in the short term, right? So, I find it very, very hard to want to fade copper. I mean, we didn't even backtest this horizontal support area at 436. So in my opinion, I know it has had a massive move higher. I know we have some RSI divergence, but just looking at price action, it's very, very hard for me to try to fade this. Nothing I see on this chart doesn't tell me that why not? We can have another higher high around towards $5, right? We might see a deeper correction after that. I wouldn't be trying to fade it here though. You can see why. Okay, guys and gals. Sorry, I forgot about that. NTLA and AMRS. Okay, let's cover those and call it a day. NTLA. Some kind of corrective pattern, but it's a broad one, so you might need to remain patient for longer. You can see here why, right? Likely this gets resolved to the upside. The question is when, because there can be a lot of noise, right? Until that happens. So hey Hugo, Kalomina, that means good month, having a good month. And AMRS. So bottom line, I wouldn't be doing anything with it as we speak, right? So if that wasn't clear, let me clarify this. Now this one. Now the question with this one is, has it already broken out? There is a good chance it has, right? That was a healthy, deep, corrective move in price. I can tell you that much. So the possible interpretations that we have already seen the low doesn't trouble me at all, right? There it is, the 61.8% fib, right? It is very likely that we've seen the low, very likely. Now, more confirmation would be a breakout from there. Buying opportunity is a pullback there. For something like this, right? That's what I think about it. Okay, guys and gals, thank you for your attention, and see you all again tomorrow. Bye-bye.
Thanks, everybody.